Good morning all, it's Monday the 11th. I'm going to have a look at the yen pairs. I think we might be starting to get a trend. I've been waiting for forex markets to start trending for weeks, months, possibly even years in some cases. You can see that the New Zealand dollar yen has been in a bull trend for at least a couple of years. It's been a tough bull trend to trade because we've spent months going sideways and retracing. By the end of December, we were still trading where we were at the beginning of June. So it probably would have been impossible to hold a long position, especially through that summer-autumn period. Now, the market's reversed. We've come back down through the November-December peak to test some important support around the 23.6% fib and the 38.2% fib. Well, I like to break my fibs down, as you probably know. So we've got an area of confluence around there. We've got the 100-day moving average, the blue line. We've got trend lines just below there. So a break below there would basically trigger stops on longs, in my opinion. So this is really quite crucial. If the New Zealand dollar is going to remain in a bull trend, we have to start bouncing off this low 90.00 area, 90.40, 90.00. We start breaking below 89.70, really, that trend line. Then we're going to be looking at potentially the start of a bear. Fundamentally, there is talk that the Bank of Japan will have more of a hawkish tone moving forward on concerns about inflation picking up. So I've got it in the back of my head. The market is basically betting on the Bank of Japan having a more hawkish tone moving forward. And that is the reason why the yen has been climbing recently. We're reaching a very crucial point where either the bulls have to group together to maintain this longer term bull trend, or we're going to break down, and I think we're going to see an acceleration to the downside. I've also got a good support level in the Canadian dollar versus the Japanese yen, but I can't really show you on here. It's a bit of guesswork and it'll take too long to explain why I've got that. If we break below sort of 108.30 area, that should be quite negative for the Canadian dollar versus the Japanese yen. This is the US dollar versus the Japanese yen. Now, very much sideways recently. I should add a couple of trend lines here. I think that would be a good one. We are testing some support around 146.35, 146.10. You can see we've got a confluence of Fibonacci levels there. We've got the 200-day moving average as well. Previous swing low. This looks like a good support level. So if we bounce, we're going to stay in a very boring sideways range. But if we break down below the sort of 146 area, we're looking at further significant moves to the downside. I can't quite put my finger on a pattern here, and this has been tough to trade, obviously, because we really haven't gone anywhere. Right now, for example, we're still trading where we were around the end of 2022. The real move would come if we start breaking below 142.00, but of course we're nowhere near that now. We're 500 pips above there, so I'm just trying to make the best of what I can within this sideways range. Aussie yen very clearly in a strong bull trend. I'm starting to wonder if the market is tired. I can't really isolate a clear pattern on this, but you can see we've got some support around the low 97 area, and if we break below the 100-day moving average, I'm going to take that as something more negative. We're testing the trend line, the Fibonacci level. Price action wise, there's nothing really to back it up, so it's a bit weaker, this argument. But I've just got this feeling that the yen is going to strengthen, and I'm looking for excuses to get into a long position for the yen, really. So if we can't hold above the trend line, the fib level, and the 100-day moving average, I'm going to suggest that the Aussie yen could see some further moves to the downside. British pound has been strong against a number of currencies recently in light of the fact that the UK economy isn't doing as bad as perhaps analysts had expected, and therefore interest rates maybe are not going to come down quite as quickly as initially thought. You can see the pound versus the yen is pushing higher, but maybe that's a small double top. But we're holding this trend line that goes back to August, so there's a bit more of a negative tone. The candles on the show us probing to the downside and recovering, but maybe we're going to break down. So again, it's a weak argument. I don't really have a strong pattern, a strong trend, a strong signal to say that the pound is going to fall against the yen, but I am watching carefully to see if we do get a breakdown. And if I take my fib levels from that January low, we've got a 23.6% fib around 188.33. We've got these little swing highs, the top of these candles anyway. We've got long upper wicks on these ones around that area as well. Just a little swing low down there. It all adds up to me around the low 188 area. We should have some support, and therefore if we break down below it, maybe we're going to see further moves to the downside again. I'm just trying to catch what could be a bull trend in the yen. I'm trying to get in early because we have not had tradable bull or bear trends in forex markets for such a long time, and I don't want to miss this one. We did really well catching that move up in gold, buying breaks above resistance levels, 150, 200 points in gold we were bagging on that trade, and that really has sort of made the month. And I want to make sure we get in on a long yen trade if this happens. I think if we just try these trades, and especially on breaks of support levels, we could see some decent moves to the downside, and I'd love to get on those moves. Okay, if you've got any questions, put them in the box and I'll answer them as quickly as possible. I hope this has been helpful, and if you want me to look at other markets, do let me know.